Morning, everybody. Jim Barrett from RJL Futures. It is Monday morning, the 22nd. Notes and bonds closed Friday on a strong uptick near the highs of the week, actually. But in an eventful Sunday night, have slid pretty hard. We continue to slide here today, this morning, Monday morning, on more hopeful attitude toward Greece. I mean, it's been months, even years. It seems like we go back and forth crazily over this little country. But since it's viewed as a barometer of the EU as a whole, or rather the economic health of the EU as a whole, it makes some sense, I guess. But anyways, the Greek proposals, whatever they made, have tilted the attitude optimistically for stocks, European stocks rally quite a bit. And after kind of a rough Friday afternoon, our stock indexes have regrouped and are pushing into new highs, is led by the health stocks and the NAS. So this obviously is a kind of bearish environment, especially for the long end of the curve, the notes and bonds. And indeed, the spread, the ultra long bond to the fives have already taken out last week's low. There's probably room for these steepeners to go even further. I mean, the Fed, we had the Fed last week, of course, and her whole deal was that even when she starts, we're not going to have a very steep ascent of short-term rates. I mean, it really, all this talk and really not too much is going to happen. I mean, a lot of Wall Street firms have pushed back their ideas of, the first move to December. I think Goldman Sachs is in that camp. And even if they do move in September and push this off the 0 to a quarter range, it's going to just be mild. Not enough probably to derail stocks. And I think derailing stocks is the only way to get the long bond, the long end of the yield curve, to restabilize things. And until then, it appears there's going to be pressure. Reports this week. What do we got? It's PMI cycle starts with China tonight. Our PMI manufacturing will be at 8:45 tomorrow morning. Durable goods 8:30 tomorrow morning. New home sales. It could be a little shaky with the long end of the curve pushing mortgage rates over 4% for the first time. I mean, the housing sector doing better, but it's fragile. Anyways, Wednesday GDP. Thursday, personal income, and then services PMI. On Friday, consumer sentiment. It doesn't look like there's much out of the Fed governors this week. Esther George speaks Friday afternoon. I don't see any other speeches. There may be. Be careful. Always check. So the week has begun under some pressure. I expect it to continue. The support in the 30 years down 147.5. There's room to slip further, especially if stock indexes continue their push into new high ground. Final note, there's an article in Barron's about the hidden costs of bond ETFs. The bid offer is wide in these things, and of course you don't have 24-hour access. So if you're considering trading in the note and bond arena, you really do need a futures account. And of course, that's something RJL can do for you. Our number is 800, my number 800-500-2461. Please give me a ring. Thanks. This may involve substantial risk and may not be suitable for all investors.